This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on July 27th, 2017. And as we tape today, we have a new world's richest man. Jeff Bezos surpasses Bill Gates to become the world's richest person after a surge in Amazon shares. So Bill Gates, yes, he is on Skid Row. You know, what does he have now? Only 80 or 90 billion? Hopefully Bill can get by. Maybe we'll have to do a special radiothon for him at some point. But Jeff Bezos is the new richest man in the world. Connect with us, rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Radio show runs every Sunday afternoon at 3 on 630 CHED. Miss a show? They're archived on Harold's website, rarecoloreddiamonds.com, podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. HSFineAuctions.com is Harold's auction site, and currently underway we have an auction, and we'll talk more about it a little later in the show. Our featured diamond of the week is a 1.23 carat marquee cut, fancy vivid yellow, internally flawless. See it online, rarecoloreddiamonds.com, featured diamond of the week. And last night, we found information on the Argyle Pink Diamond tender. We will talk about that coming up in the second half of the show. This week, Harold, the Canadian dollar popped up above the 80-cent mark. A lot of people believe that the Fed in the United States will not raise rates again until December. There is a general feeling that they may raise rates here in Canada in September, although it seems that the Canadian government is putting out some messages to the Bank of Canada. No, don't do that. We wouldn't be very happy with it. That was a story I saw on Bloomberg this morning. So we will have to wait and see. But I think right around 80 cents Canadian, from what a lot of experts have been saying, is that is probably about the peak, 80 to 82. You get beyond that and the Canadian economy is in real trouble. So I would not expect much strengthening of the Canadian dollar beyond where we are. It hurts so many companies, and it's one of those things that we'll really be keeping an eye on to see what happens here in the next 6 months. And Harold, give us an update on the rest of the financial markets.
Well, I got to tell you, I really don't have an awful lot of faith in governments. I know how badly the U.S. government is doing at this particular point, and these politicians, I just don't know where their heads are at as far as Canada goes. I mean, we love Canada, but what they just did is ridiculous. I've sat here for the last couple of weeks scratching my head saying, why in the world would they in Canada raise interest rates? I mean, we've read numerous reports over the past several months that have stated that, you know, Canadians are at the highest debt levels that they've ever been at. So Canadians are borrowing more money than ever. And then on top of that, because of the real estate debacle in Vancouver and in Toronto, where real estate prices are crumbling, the worst thing that you could possibly do is raise interest rates. And just think about this for 1 second. You're looking at a situation where most Canadians are heavily in debt, credit card debt, loans, that type of thing. And by raising interest rates, it means that you're paying more interest on your... Why in the world would the Canadian government do that when, you know, we're suffering so badly with the oil markets and with the overall real estate markets and the economy in general? I have no idea in the world why they would have actually gone ahead and raised interest rates. It's going to kill the real estate market, and most people have most of their net worth in their home. People don't speculate normally with their homes. That's a ridiculous thing to do, but that's what's happening at this point. You had real estate prices in Toronto were going up so high and so fast that people were actually gambling with their own homes, and now they're going to pay for it because there's no way that you can do that with real estate. You can't sell and buy fast enough in order to make that spread. So by raising interest rates, it's going to kill the real estate market even more. On top of that, it's going to put Canadians into much deeper financial problems because if they continue to raise interest rates, it's going to make those loans that much more expensive. It's going to make mortgage rates more expensive. And then the bottom line is that you're supposed to raise interest rates when there's fears of inflation. There's no fears of inflation. Canada's got 1% inflation, and right now interest rates are right at around 1%. If they did raise the interest rates to 1.5% to 2%, why in the world would that be a beneficial situation for Canada? So again, at this point here, I'm just absolutely baffled as to why they would have been so stupid to raise interest rates. The other thing is that Canada exports a lot, okay? And a weak dollar is good for Canada, not a strong dollar, because it makes exports that much more expensive. So by raising interest rates, they made exports more expensive, which is going to hurt business. That's what Randy was just referring to. There's many companies within Canada that are infuriated that they raised interest rates. On top of that, people that are already in debt and having problems making their credit card and their other loan payments are now going to have more payments to make because interest rates are going up, and then it's going to kill the real estate market, which is the worst possible thing that could happen in Canada at this point, because we had two back-to-back months where real estate prices dropped over 30% in Toronto. That is not the way a real estate market is supposed to trade. This is where most people have their life savings. That's where most people are going to be able to retire due to the value in their home. And now the prices are plummeting. Now people are getting petrified. They're starting to panic and sell into a seller's market. It's a horrible situation. So my recommendation at this point here is just take a deep breath and don't do anything. To start liquidating real estate in this type of market, you're going to get killed. Don't try to time the market and start to buy real estate on the upside, because there's no reason for it to go back up that strong. So at this particular point, things are so risky and so frightening out there in the financial world, you really have got to be sharp as to what to do with your money. You know, the thing is, during the summer, the markets have been lethargic. Nothing is happening in the markets at this point. I've got to say that this is the most boring that the markets have been in an awful long time, because they just don't know what to do at this point. You know, you're getting mixed signals from Trump. You know, he threatens and he says he's going to do things, but he's done nothing so far. I'm absolutely shocked at that. I know that his hands are somewhat tied, but the fact is that he's accomplished absolutely nothing thus far, and that's why the markets are so lethargic. You know, when he talks tough and he's going to go into North Korea and he's going to do that, and Afghanistan and ISIS and everything, he's done absolutely zero. So, you know, at this particular point, he's got to get his act together. He's got to start to do things productive in the United States, which will strengthen their dollar, which will strengthen the economy, and everything will be fine. At this point here, there's really no direction. Gold's trading in a range, silver's trading in a range. Right now, gold's down $2 and silver's up 4 cents. That tells you what this market is doing at this point. You know, the fact is that with interest rates so low, and even if they do continue to raise interest rates in Canada, which I would be shocked if they did, but if they do, it's not going to benefit you, because interest rates are not going to go up enough that you could ever live off the interest on your bank accounts type of thing. So we've got a lot of problems out there. You know, last year the Canadian government signed Bill C-15, which Randy and I reviewed in depth and thought it was one of the worst things that the Canadian government could do to us as Canadians. But then again, look what they just came out and did again. So I have no faith in what the government is doing at this point here. I would be extremely careful and not trade based off of this news, because what they're doing is not going to work. It's going to blow up in their face. So what we really need to do is take a step back and not fall into the trap of investing in these markets that are very volatile and basically are directionless. They go up for a short period of time and then they plummet for a short period of time. That's not conducive to making money in the markets. We have private investments. We are not in paper assets. We don't buy anything paper. We buy everything physically. And we have private investment programs that our clients invest in that pay over 25% a year. if you want to learn about that, just give me a call and we'll explain it to you. But at this particular point, again, you've got some very quiet markets. Gold's trading right now just below $12.60. Silver's trading below $17 at $16.78. Platinum's trading right now at $9.35. It's actually, $300 below the price of gold, which is unusual. The Canadian dollar is trading right at around 80 cents. The U.S. dollar is trading just below 94. So we've seen about a 9-cent pullback in the U.S. dollar, which is absolutely shocking to think that could actually happen for absolutely no reason. Now, the reason that the U.S. dollar is falling off at this point here is because Trump hasn't done anything. He hasn't started building. He hasn't done anything. He's making a little bit of headway with Obamacare, but, that's a disaster in itself because nobody could figure that out. There's no way in the world that you can have conditions, allow somebody to get insurance when they already have an incurable disease or something, bad medically with them. There's no way that the insurance companies can afford that. So at this particular point, again, the summer is going slow. We monitor the markets every minute that they're trading. And at this particular point, we need some news to come out in order to get these markets rocking again. I think it's going to happen during the fall, and I think a lot of it is possibly going to do with the stock markets getting very volatile. Right now, the U.S. stock market, is trading over 21,000, but in all honesty, there's no real reason for that. There's only a few stocks that are going up. The other thing to be of tremendous concern is the retail markets. There are chains that are closing down like Sports Authority and Sears and Macy's and major retailers that are closing 400, 500, 600 stores at a time. That's going to kill the unemployment numbers. It's going to kill the economy in the United States. And other countries that are finding the same thing. And a lot of it has to do with Amazon. So Randy mentioned at the beginning of the show that, as the owner and CEO of Amazon, that is now the richest man in the world. I just don't get it. I can't buy clothes online type of thing. Where do people, are they buying everything through Amazon or Google or those type of companies? So the retail market's in trouble. That's going to hurt the commercial real estate market. There's a lot of problems out there that you really have to sit down and think before you make any type of investment. If there's any way that you need my advice, just pick up the phone and give me a call. No matter how much money you're looking to invest, I'm here to help. There's opportunities out there, but there's not a lot of opportunities out there. We have private investments that have done extremely well, for the last 4 or 5 years and are continuing to do so, and those investments pay out around 25% a year. So give me a call. I'll explain what's happening in the world economies, what's happening in Canada, and how you can get around all the problems and start to make money again.
How do you invest today so you can retire tomorrow? That is the major question. That's why we do our radio show for you. That's why we put it together, our free weekly newsletter, the companion to the radio show. Listen to the radio show, go through the material. If you have never spoken with Harold Siegel, take the time. It's a free call, and anything discussed, confidential. Connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website. And check out the auction that is underway right now. Harold's website, hsfineauctions.com. We'll talk about that in the second half of the show. But it's very hard in this environment, and we're in the summer doldrums, so it makes it even worse, to really wonder where the financial markets and even geopolitical situations are going. But we know for sure at some point there will be some unrest, and it will obviously affect your investments. And you want to position yourself to take advantage of the unrest prior to it happening, profit and protect the money that you have. Speak with Harold, 1-800-432-1022, RareColoredDiamonds.com, the website. Our featured diamond of the week is a 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. See it online, RareColoredDiamonds.com, featured diamond of the week. In the second half of the show, we will talk about the pink Argyle diamond tender. And it was revealed yesterday in New York City, and we will have more information for you on the Argyle diamond tender and what it's all about a little later in the show. A guy that we have followed and read his material for quite some time is John Embry. John, originally with the Royal Bank of Canada, was on the Canadian Business Channel back in the early 2000s, and he was recommending gold and silver, the same as Harold Siegel. And people thought that we were crazy and John was crazy, and it turned out that that wasn't the case at all. Gold was around 300, and you had silver at around 4. And in 2011, silver goes to close to 50, and then you had gold all the way up to over $1,900. And John Embry saying now, I am somewhat fascinated by the strength in the Canadian dollar and the optimism about our economy. Canada is experiencing a historic building boom, and approximately 7% of the employed population is now working in that field. The fact that that number is roughly twice the percentage in the United States should give cause for some concern. Ironically, an increasing amount of the residential real estate is beyond the average Canadian's capacity to purchase at current prices. And a lot of the purchases of new buildings represents a de facto wandering operation for money flooding out of third world countries. This is yet another manifestation of the monetary policies globally. There still appears to be an oil glut globally, and with the Canadian oil industry struggling mightily, a much stronger Canadian dollar seems inappropriate. And perhaps it's more representative of the weakness in the U.S. dollar rather than any particular merits of the Canadian dollar. In our free weekly newsletter, we have that story and a lot more, and we encourage you to get our free weekly newsletter. Connect with Harold. We'll be happy to send it out to you. You can go through it in 5 minutes or 10 or spend hours if you want. And one story that I thought was so important this week, because this is where they're hiding inflation from us. Shrinkflation is what it's called. And this is in the UK now, and of course it's happening in North America. You see it all the time. You go to the grocery store. I go to the grocery store. I get my own food. And I see, hey, that package looks a lot smaller. You're getting a lot less, but you're paying the same amount, or in some cases, maybe a little bit more. Well, shrinkflation has hit 2,500 consumer products over the past 5 years in the UK. And it's interesting to note, and this is official data, according to the Office of the National Statistics, items that so-called shrinkflation has affected range from chocolate bars, toilet rolls, coffee, and fruit juice. However, most of the items getting smaller were food products. Over the same period, 614 products had become larger in that 5-year period of time. But it's interesting to note, so here you have shrinkflation, and normally inflation is prices going up, you're paying more for things. Well, this isn't being registered, and it's not being registered because they're shrinking the packaging. You're getting less, and you're still paying the same amount. And Harold, it's a Ponzi scheme that has kept inflation, true inflation, down for the average everyday person, and it's a bit of a mirage, because if they were actually raising prices as they should, instead of shrinking the packaging and obviously keeping the margins there and charging the same amount, then the numbers for inflation would be much, much different, I think. Don't you agree?
I do agree 100%, because there's no doubt that the cost of food production goes up every single year, which is inflationary. So, again, I agree with what you're saying on that. They're just trying to pull the wool over our eyes on that. You notice it just by buying a bag of chips. It's only 2/3 of the way full at most. Mm-hmm. So you're 100% right on that. And again, over the short term, it will, until people catch on and understand that they're actually paying way more than what they should be paying for the product. But that will eventually happen. The thing is that, we live right now at a time, where there is extremely low inflation all over the world. That's why interest rates are not high. When there's high inflation, the way that you fight inflation is to raise interest rates and strengthen your dollar. If they're doing that in Canada and the inflation rate is not going up, it's going to be a problem. And the reason it's going to be a problem is that it's really going to hurt Canadian corporations that are trying to do and export their products overseas, because again, it's just going to cost them that much more. So a lot seems to be going on. People are always trying to find or build a better mousetrap or try to pull the wool over your eyes type of thing. But again, it's pretty obvious, I think, to most people what the food people are doing is that they're just conning us by giving us less and charging us the same amount. And I guess some people will buy it, but I'd say a lot of people are smart enough to understand it.
And as Harold was mentioning earlier, here in Canada, we're at 0.75 when it comes to the bank rate, and that means we're about a quarter point away from 1%. If you're in a GIC, you may be getting a little bit around 1% if you're lucky. And at 1%, using the rule of 72, your money would double in 72 years. That's just not going to get it done. It's that simple, and that's why we say, take the time, pick up the phone, speak with Harold Siegel. The call is free. It's confidential. What's discussed is 100% private. You do not have to do any business with Harold. There's no obligation. All you need to do is speak with him, find out what programs he has in place where you're not making less than 1%, and Harold does have them. Now, Canada is always, and it is a fair comparison, is always compared, Harold, to California because we have roughly the same population. And it's scary to note, more than a third of California households have virtually no savings and are at risk of financial ruin. More than 37% of California households have so little cash saved, they couldn't live at the poverty level for even 3 months if they had lost a job or suffered another significant loss of income. The scorecard also shows that 46% of households in the Golden State didn't set aside any savings for emergencies over the past year, a higher percentage than the national average in the United States of 43.7%. And it doesn't help that 21.1% of California jobs are at the low-wage, minimum wage occupations. So it just goes to show, Harold, with about a minute left here, we're being told everything is okay. And the truth of the matter, it's not. And people need to wake up to the fact this is what's happening, and they need to position their money accordingly as a result.
You're 100% right, Randy. Again, in California, it's one of the most expensive places to live. Their taxes are extremely high, so on top of income tax, you're paying state tax, which puts most people that make money there over 50% taxes, which, is very difficult to overcome. The fact is that it's just very, very difficult out there. In the United States, 75% of the population has less than $10,000 to their name. Of these millennials, 40% in Miami still live with their mother and father up to age 35. The rest of the country is at 35%. A lot of that population has no money put away for savings. The millennials don't spend money because they don't make money. It's a very, very concerning time, and if you don't know what to look for, you're going to find that the markets are going to change, and you're not going to be aware of what's going on. These millennials don't spend any money, and they live at home. That is going to affect the economy in a huge way.
Find out more. Speak with Harold Siegel. How can you be making money today so you can retire tomorrow? Connect with him, 1-800-432-1022, the website, rarecoloreddiamonds.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July 27th, 2017. Our time is 9:07 Mountain. Radio show runs 6:30 CHED, Sunday afternoon at 3. Connect with us, rarecoloreddiamonds.com, or call 1-800-432-1022. 1-800-432-1022. Harold's auction site, hsfineauctions.com. There's an auction underway right now, and we will be talking about that momentarily. Our featured diamond of the week, and I love the marquee cut. It's just like a cat's eye type cut, and it is beautiful, especially on a yellow diamond. 1.23 carat marquee cut, fancy, vivid, yellow, internally flawless. See it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Now, late yesterday, there were a couple of stories that came out, and we were able to get them prior to the radio show today. The New York Times wrote an article, "How much for that fancy red diamond?" And a very interesting article about the rarity of colored diamonds and rare diamonds. But then it gets better. Rio Tinto, they always do their Argyle Pink Diamond tender. Usually it comes up in August, around the end of July, the beginning of August. And they actually started it yesterday in New York City. Rio Tinto reveals its largest red diamond at a world-exclusive preview in New York. Rio Tinto has unveiled the largest fancy red diamond in the history of the Argyle Pink Diamond tender during a world-exclusive preview in New York yesterday, and that was Wednesday. The 2.11 carat polished radiant cut diamond known as the Argyle Everglow, love the name, is the dazzling centerpiece to the 2017 Argyle Pink Diamonds tender, an annual showcase of the rarest diamonds from Rio Tinto's Argyle mine in Western Australia. Now, Rio Tinto Copper and Diamonds Chief Executive Arnaud Surratt said, "We are delighted to announce this historic diamond at our tender preview, a testament to the unique Argyle ore body that continues to produce the world's rarest gems. Unprecedented in size, color, and clarity, the Argyle Everglow has been assessed by the GIA as a notable diamond with a grade of fancy red VS2. In the 33, this is a big one now, in the 33-year history of the Argyle Pink Diamonds tender, there have been less than 20 carats of fancy red certified diamonds sold. Only 20 carats. Argyle Pink Diamonds manager Josephine Johnson said, "The Argyle Everglow represents rarity within rarity and will drive global demand from collectors and connoisseurs in search of the incomparable." Now, the 2017 Argyle Pink Diamonds tender is named Custodians of Rare Beauty in honor of its rich provenance and honorable pedigree. This year, Harold, 58 diamonds in the tender, weighing a total of, and here we go again, like this is not a large amount, 49.39 carats. That's it, including 4 fancy red diamonds, 4 purplish red diamonds, 2 violet diamonds, which are beautiful, and 1 blue diamond. The collection comprises 5 hero diamonds selected for their unique beauty and named to ensure there is a permanent record of their contribution to the history of the world's most important diamonds. And they have Lot 1, Argyle Everglow, 2.11 carat radiant-shaped fancy red diamond. Lot 2, it's the Argyle Isla, 1.14 carat radiant-shaped fancy red diamond. Lot 3, the Argyle Aveline, and that's a 2.42 carat cushion-shaped fancy purple-pink diamond. Lot 4, the Argyle Kalina, 1.50 carat oval-shaped fancy deep pink diamond. Lot 5, the Argyle Liberté, a 0.91 carat radiant-shaped fancy deep gray violet diamond. Now, the Argyle Pink Diamonds tender will be showcased in New York, Hong Kong, and Perth, with closing bids October 11, 2017. And Harold, when he first introduced us to diamonds back in 2005 and started rarecoloreddiamonds.com, he was the first one telling us invest in rare-colored diamonds, and it's turned out to be just an amazing investment. We actually offered at that time, through the Nature series of PBS, a show on diamonds, and they actually talked about and showed the Argyle Diamond Mine in Western Australia from Rio Tinto. And Harold, what a journey it's been since 2005 to see all the different Argyle Pink Diamond tenders over the years, but as well to see the prices increase on such a dramatic basis, and knowing full well that we know in 2020 this mine is going to be shutting down, and at that point they'll have some diamonds probably in their vault for a few years, and then that is it. The diamonds, 90 to 95% of the world's pink diamonds are absolutely done.
You bet, Randy. Well, that's very interesting. First of all, that's an amazing diamond that they found, and especially for a red diamond to be a VS1 is extraordinary. So that's definitely the highlight of the entire tender. But interesting is that you said there was 57 diamonds in the
58.
tender this year?
Yeah, there's 58. 49.39 carats.
But the total carat weight was under 50 carats. So it means that the majority of the diamonds are under a carat, which is typical for Argyle and for these type of diamonds, because Argyle pink diamonds and red diamonds are known as the most concentrated form of wealth on earth. 95% of the diamonds that come out of the Argyle mine are under a quarter carat. So they keep the diamonds that are over a half a carat to a carat and over for the tender. What has also happened over the last 4 or 5 years is that the quality of these diamonds has decreased substantially. They're no longer VS1s or SI1s or 2s. 40 to 50% of these diamonds are I1 and I2 clarity, meaning that you can see the visible flaws in the diamond with your eye, naked eye. However, these diamonds are still selling for record prices, which tells you that the fact is that what is most important in an Argyle pink diamond is the color of it, how beautiful that pink comes through. You know, the other thing about the Argyle mine and pink diamonds in general is that nobody really has figured out why a diamond turns pink or red. We know why a diamond turns blue, because there's boron, that mineral boron that seeps into the ground and changes the diamond from white to blue. Then you've got nitrogen, which will turn a diamond yellow or a diamond orange. You also know that uranium will turn a diamond green. We have no idea what turns a diamond pink, and goes with the rarity of that diamond. And some of these diamonds are extremely, extremely highly saturated. The vivid pinks, which are the highest color grade given by GIA, tend to sell for the most amount of money. So, again, at this point, it's always thrilling to see these diamonds coming out of the Argyle tender. You know, that beautiful 2-carat red is got to be one of the great reds in the world, because red diamonds, I think the largest red diamond ever cut is 5 carats, and that's an almost priceless diamond. I remember when we first started talking about diamonds, we brought up a diamond called the Hancock Red. You know, the thing is, there was this guy by the name of Hancock. It was back in 1950, and he was intrigued by colored diamonds. So one day he came home with some diamonds, and one of them was red. And his wife just didn't see what he saw in these diamonds. Well, anyways, I think he paid $50,000 for the diamond, if I'm not mistaken. When he passed away in 1986 or 87, I'm trying to remember the story, his wife finally cashed in some of these diamonds, and the Hancock Red sold, I believe, for just over $1 million a carat at that particular point. Now, that was back in the 80s. Now we're talking about 2016, 2017, that diamond is almost priceless. And the fact is a diamond that they've actually appraised for sale a few years ago, and it was in the 3 to 4 million range. So now you're talking about a diamond that was originally purchased for $50,000 in and around that price, and that wasn't that long ago. That was 1950. So a diamond like that was held, let's say, within the family for, let's say, 66 years, but that diamond went from 50,000 to close to what it's worth today of about 3 to 4 million. That's the benefit of owning a rare diamond. You don't hold on to it for a couple of years. You're just not going to make any money with it. You need to hold on to this and keep it in the family for a long period of time. You know, it's similar to a retirement savings plan. You know, when you start in the business world and you start working and you start putting money away for retirement, you may be in your 20s or early 30s at that point. You know, you're not going to retire until you're 60, 65 years old. So you're going to keep your retirement savings plan for 20, 30, 40 years type of thing or more. It's the same thing with a diamond. A diamond doesn't trade like a commodity like gold or silver or oil or anything like that. It's too small of a market. It's the type of asset that holds its value. It's the type of asset that could be sold in another currency. It's the type of asset that could change your family's net worth, but it's not something that you hold on to for a short period of time. So we have our auction going at this point. We have 2 different auctions. Most people that have attended our auctions in the past know we have this phenomenal live auction that has done tremendously well. However, we now started another auction, and it's more of a longer-term auction that this particular auction will go on for the next 3 or 4 months. During the summer months, things are extremely slow, but we've had success. We've sold, 3 items out of the 10 that we've had up, and we're adding more and subtracting more as they sell type of thing. As we head into the fall and winter, I believe it's really going to pick up in tremendous popularity, and I think we're going to do tremendously well. What we do, again, is we're trying to create the secondary market that never really existed before, so down the road we can sell our clients diamonds. Initially, again, when we first started selling diamonds to our clients, it was because of currency devaluation, because it's an asset that holds its value, that never declines in value, and over the long term can make you a lot of money. Unfortunately, some people have had to sell early, and they're not going to see the type of returns that they need to see by holding on to an asset like that over the longer term. So if you are going to invest in diamonds, do it for the longer term. It's not a short-term investment. Our auctions are doing well. I'm very pleased with what we produced. I think our new auction site is spectacular. It's going to get a lot of press. I'll be going on probably Bloomberg and Fox in the fall and winter to promote it. On top of that, we've put up some magnificent kilo coins. They've done tremendously well for our investors, and many people are buying the coins as soon as they get up there. So we've got some very exciting things happening. It's at a time when, again, the markets are all almost lethargic this summer. So we anticipate as we head into the fall and winter that things are going to pick up and get much busier, but we're pleased with the results at this point. And again, Randy, the information you found on the Argyle tender is just so exciting, and it definitely backs up everything that we've been saying about Argyle, that they produce 95% of the world's pink diamonds. The mine is going to close within 3 years, and if you're one of the fortunate few to own some of these diamonds, I believe you're going to do very, very well.
If you take a look at the picture that they have of the Custodians of Rare Beauty collection, the 5 different diamonds they've highlighted, and these diamonds, wow, it's, like, hey, I love gold and silver, don't get me wrong, and you just look at these diamonds, and if you're investing in something, to have them in front of you, to be able to wear them and show them off, take them out, to know it's an investment that will appreciate over 10, 20, 30, 40 years, and you'll do very well. Just to be able to look at them is absolutely amazing. And sure, you can get satisfaction out of looking at gold and silver and platinum and palladium coins. There's some beauties like the Libertad and some of the other coins that Herald has offered over the years. But I'll tell you, when I look at these diamonds, and I have the picture in our free weekly newsletter, it's breathtaking, because you just have the best of the best. And it's something that really takes your breath away. It's very, very beautiful. And we have a featured diamond that is very beautiful, and it's one of those diamonds that's very rare. It's a 1.23 carat marquee cut. So it's a rare cut, marquee cut, fancy, vivid yellow, internally flawless. And this diamond, it's sort of, as Harold has said in the past with these type of cuts, it's like a cat's eye. And the color on it is very vibrant, the yellow. You can see it at rarecolorediamonds.com, featured Diamond of the Week. And I would get our free weekly newsletter from Harold this week. We have the New York Times story, how much for that fancy red diamond. We have info on the Rio Tinto Argyle Pink Diamonds tender. And we also have, and we're continuing on our journey throughout the first 6 months of this year, Christie's and Sotheby's. Last week we had Sotheby's, where they auctioned off those earrings, the blue and pink earring for, $57 million. Well, Christie's magnificent jewel sale, this was May 17, 2017, a day later in Geneva, Switzerland. and they had a lot. And you talk about beautiful pieces. If you walked in a room with this around your neck, you would stop everybody. Lot 228, they call it La Legende, a diamond and cultured pearl sator necklace by Bomer Bassage. And what it is a 92.15 carat diamond, a heart-shaped diamond, and it has a cultured pearl necklace surrounding it and attached to it. The estimate in Swiss francs, 14 to 20 million. And remember, the U.S. dollar trades at about 105 to the Swiss franc. It's pegged. So it sold for $15.5 million, but what a beautiful piece. Also, lot 204, a colored diamond ring, set with fancy intense blue cushion-shaped diamond, weighing approximately 9.97 carats, and it was a fancy intense blue color VS1 clarity, Swiss francs 2.5 to 3 million Swiss francs, trading at 105, obviously, against the U.S. dollar, the Swiss franc. It sold for $13.1 million. Now, Harold, we have other auction results we can send out to people in our free weekly newsletter. We encourage them to connect with you. 1-800-432-1022, rarecoloreddiamonds.com. Speak with Harold. Learn about the Argyle Pink Diamond Tender. How can you retire today? Obviously in a fashion or retire in the future in a fashion that you're going to be happy with. Harold has the programs in place where you can be making money today. And Harold, some nice auction results, but what a week it's been for Rare Colored Diamonds, New York Times article, Argyle Pink Diamond Tender. We go back and take a look at some of the auction results, and some of these items are like museum pieces. And to walk into a room with a heart-shaped diamond around your neck and have the pearls, what a beautiful sight. And that's something with jewelry and diamonds that you cannot find in any other investment.
100% right. Pride of ownership, and the fact is that when you hold the diamond in your hand that you have something special. Just getting back to the featured diamond, it's one of the rarest and most beautiful yellow diamonds I've ever seen. We have one on our auction site that's over 2 carats in an Asher cut, which is one of the rarest yellow diamonds. It's vivid in color. Well, the featured diamond this week is spectacular because it's a very rare cut. It's a marquee, but it's a super vivid, meaning that the color of it is a 10 out of 10. You could place that particular diamond, the one that we have as a featured diamond, amongst 10 other vivid yellow diamonds, and you will pick that diamond out before you pick any other diamond out. That's how strong the color is. Now, we showed it as a loose diamond, but in actual fact, the diamond is so magnificent that we have placed it into a ring setting that makes it even more beautiful. So the fact is that if you're interested in the featured diamond, it's one of the rarest yellows. It's the best color you can get. It's a very rare cut. And the fact is that the color of it is so vivid that you would be able to pick it out of, not only 10, but out of 100 diamonds. You will pick this diamond out first as the strongest color that you've seen in a yellow diamond. It's absolutely spectacular.
Go take a look at the video, and video there, rarecoloreddiamonds.com, featured Diamond of the Week, 1.23 carat marquee cut, fancy vivid yellow, internally flawless. In the auction world, I thought it was interesting to note this week, and we obviously see rare colored diamonds doing exceptionally well in auction. And we had a story earlier in the year about that fact from the Wall Street Journal, and as well that New York Times article. But we see collectible cars. That market's pulled back a little bit, but still doing fairly well. The art market pulled back a little bit, but still doing very well. You have handbags that people are investing in. You have rare watches. And there was a Patek alleged watch, and this is allegedly meant for Vladimir Putin, that sold for $1.2 million in auction. It was a Patek Philippe timepiece that was supposedly going to be for him, sold for $1.2 million in Monaco. And there was a bidding war for it that lasted about 15 minutes. They did not disclose the seller, but it was one of those things where it just goes to show when you have watches and diamonds and gold and silver, collectible art and cars and even these handbags now, they're getting to be really rare. Harold, the smart money, the big money, they're putting their money into hard assets as they see what's going on with the debasement of money all around the world, central banks printing money, the EU continuing to do that after their last meeting last week. They're continuing with their stimulus. But you can see the smart money is moving into hard assets like diamonds and gold and silver and collectibles because they know it's something solid that will be there tomorrow. And in some cases, obviously, it's something you can drive in. You can put on your watch arm, your watch obviously on your arm, and your jewels. You can wear those, and it's a phenomenon that I think the time is more than come. Based on the fact that if you're going to invest in something, you might as well get enjoyment out of it because let's face it, as we've joked for a long time, you're not going to wear a stock certificate to a party or a bond certificate. It just is not going to happen. So this is the beauty of this type of investment. Rare-colored diamonds or even watches, they're just something that takes investing to that next level, which we love.
Better believe it, Randy. Again, it's really an exceptional investment and asset to own. That's the reason that the diamonds that sold this year and last year especially are hitting record prices. I mean, $57 million that somebody would spend on a pair of earrings. It's not that he bought a pair of earrings for his wife. He bought an investment for the family trust that's going to stay in the family and make a fortune of money over the longer term. That's what these guys do. You know, if it makes sense for the multimillionaires to do it, it makes sense for us to do it on a smaller scale. Obviously, most people cannot afford, $50, $60 million in diamonds, but a lot of clients that own $20, $30, $50, $100,000 diamonds will do very, very well with those also. So it's just that type of asset. It's something that you get tremendous enjoyment from. They're so rare that they never decline in value. And again, what we've done is we're building a secondary market to resell them. Nobody else really does that. So again, it's always a work in progress. This new auction that we're running is we're working out minor kinks, but the first 2 weeks of the auction went very, very well. Very few hiccups in it, the odd one, but very few. And we're very pleased with what the results are going to be. So again, we're looking forward to a tremendous 2017 in the diamond, gold, and auction business, and we hope you'll join us.
HSFineAuctions.com, and Harold, people want to go there. It's a very simple process to sign up. You can take a look at the catalog that is up there right now, and then you can start bidding. And we had the Libertad silver coin go. We also had the Aztec silver coin go. I know you're going to be replacing those, but people can go and take a look at the items that we have, and the sort of the masterpiece of it all, and you can see it being advertised around the internet anywhere you go, is the Liz Taylor piece. And the Liz Taylor piece is absolutely spectacular. We have about a minute and a half here.
Yeah, it certainly is. Anything of Elizabeth Taylor's will sell for a fortune, and this is no different. This is one of her most amazing pieces. It's one of my favorites. I've got the picture of Elizabeth Taylor actually wearing the piece. By the way, we did replace the Libertad and the Aztec kilo coins with two magnificent coins. One is the kilo Year of the Monkey with the diamond in its eye, and we also have the Year of the Goats. These are both extremely rare. They all have diamonds within their eye, the very limited mintage, and are up on the auction site today. So, again, it's something that will create a lot of excitement, and these are 2 kilo coins that you definitely would love to own.
The beauty of this auction is it's ongoing, and when there is a time limit, Harold, I'm sure it's posted right beside that item, and you can go there, be a part of the bidding, and wait up until the very end until you maybe make that final bid and take that item that you want. Check it out at hsfineauctions.com. The auction is underway right now. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, our featured diamond of the week. And it is, like Harold said, really rare, very, very rare, the rarest of the rare, 1.23 carat marquise cut, fancy, vivid, yellow, internally flawless diamond. see it at rarecoloreddiamonds.com, or give Harold a call, 1-800-432-1022 to learn more. Harold, thank you for your knowledge and another great show and a great week for diamonds.
Well, thank you very much, Randy. I wish everybody a wonderful weekend and a very profitable day.
The question is, how do you invest today so you can retire tomorrow? If you haven't spoken with Harold Siegel, now is the time to do it. He will answer any questions you have and get you making money today, right now. 1-800-432-1022, rarecoloreddiamonds.com, the website. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.